Do we have some real life examples of some of the clients that we've helped, maybe some unique situations or relatable ones?
This is an issue that happens really frequently, actually, and if you don't know to look for it, it can be really tough to navigate. Properties that are being renovated or under construction, the appraisal district will come out and do site inspections based on the permits, and they'll guess like what kind of percentage complete it's at on a given date. But the date of valuation for appraisal for like the tax year is January 1st. And there's a ton of properties under construction in any given county. There's a ton of properties that are being gutted down to the studs. And, there are certain feature lists that are worth, different counties do it different ways, but there's a feature list usually that's worth a certain number of percentage completion points, where your kitchen cabinets are a certain point value, the drywall is a certain point value, that sort of thing. All of that adds up to say, this is the standardized way that we're going to, give the value to this property as it's being completed. The county knows what the total permit value is. They can look at the features of the completed property and say, this is what we think is comparable for it, that sort of thing, and they can come up with a total value, and then they, over time, attribute that value based on completion status. So there have been a number of times that I've represented a property that was incomplete as of January 1st, and the last site inspection was done in mid-October. And the county just took that completion percentage as of mid-October and guessed what it would be as of January 1st. Well, what's between mid-October and January 1st? You've got Halloween, you've got Thanksgiving, you've got Christmas, you've got New Year's. Like, nobody's getting, you're hardly getting any work done during that time frame. And I was able to make that argument and get that completion percentage changed dramatically and save the customer a lot of money. Another good example is that specifically that a lot of people wouldn't know to look for, sometimes even the county doesn't immediately look for, is if you are appraising small multifamily, like a duplex. There are usually not many duplex sales. There's not a lot of market activity. It's a rare property type, big picture. And it'll end up getting appraised as residential, which, I mean, it is. Usually anything under four units is appraised as residential, but it'll be small multifamily residential. And just by default, they'll end up using single-family residences as comparables for that small multifamily, and it's just not comparable at all. So knowing to look out for that and see, oh, well, the county used these small multifamily or used these single-family residences to appraise this multifamily property. That's not valid. Like, it's not comparable. You can't do that well. And so knowing to look out for that and call it into question when you see it, is something that we do all the time that your average person wouldn't know to.
I'll give you an example. Actually, a lot of clients ask us if we can go back and fix something on their property from years in the past, or if we can change the value from years past. And 99% of the time it's no, but there are certain exceptions or exclusions to that. So one of the cases we worked on the commercial side was we had a commercial landowner that had a very large piece of property that had been replatted into vacant residential lots, and they were slowly being purchased off and developed on. But this one piece was being valued at the same land value as all the other ones around it, which was, I think, in the around $200,000 level. The problem was it had an oil well on it. And so technically nothing could be built on that. We went back, filed a correction for 3 years, for going back 3 years, to basically say you are including property that is not as descripted on the property tax roll. Got the value knocked down substantially. I mean, think down to a few $1,000s because it has no value other than what is already there. It can't be built on. It can't be changed in any way. And in turn, that saved the property owner thousands of dollars for a 3-year period going back. So that was a big win for him and us.
Yeah, and a lot of people just, like you said, they everybody wants to go back and get it fixed in the past, whether it deserves it or not. Nobody wants to pay what they're paying, right? But nobody knows how to do it, and that's something that we have a lot of familiarity with. It's a thing we do frequently.